Hey, Smart Silver Stacker here. Hope you're doing well. Welcome to another Smart Silver Stacker live stream. Today we're going to be talking about de-dollarization, fairly in depth. We're going to be talking about what is driving this global trend away from the dollar, why countries around the world are distancing themselves from the world reserve currency, the US dollar, and also some updates on just exactly that, de-dollarization. So, this is a story from Markets Insider. Argentina's use of Chinese yuan is soaring as dollars run short, and a top U.S. manufacturer may join the trend. Now, this is kind of a surprising headline given the fact that one of the most popular Argentinian presidential candidates recently floated the idea of making the US dollar the official currency of Argentina as a way of fighting their ongoing inflation problem. But when you look at the reality of what's going on the ground in Argentina, it appears that that may be a bit of a pipe dream because there is currently a shortage of US dollars in Argentina, and it's getting so bad that they are increasingly turning to the yuan as a way to pay for imports, as a way to trade forex. Right now, Argentina's central bank's dollar reserves are at the lowest level in almost a decade, since 2016. Part of this now is because they have had a record drought. It destroyed a lot of crops that they were planning on exporting. And that's one of the things about the dollar. If you're a country around the world and you need dollars, and you do, because just about everything, commodities, energy, all that stuff on the international markets, it's priced in dollars. You've got to export stuff to get them. Now, it's not like that in the US, of course. I mean, we have the exorbitant privilege of simply printing dollars whenever we need them. But in a place like Argentina, if you have a crop failure and you miss out on $20 billion worth of exports, well, now you don't have enough dollars to do what you need to do. So, what's going on there is that they are using the yuan. And it's getting so bad, the shortage, that Whirlpool, I believe it was Whirlpool, yeah, giant US manufacturer, they opened a $52 million plant in Argentina last October. But because of this dollar shortage, they had to delay imports, they had to shut down their facility. The president of Whirlpool Latin America was quoted by Bloomberg as saying, "We've had to stop the factory at some points, and that's not good for business, productivity, nor quality." So even this giant American company may begin using Chinese yuan to keep their business in Argentina running. Now, the some of the numbers here, the daily yuan transaction in Argentina's forex market hit a record of 28%. Now, in May, it was just 5%. So that just shows you how quickly these international forex markets can change and how quickly the dollar can get dumped. That is a massive increase in a 1 month time. And yuan transactions in Argentina's currency market totaled about $285 million worth. That's during the first 10 days of June. That's double the entire trading volume for the entire month of May. So, again, this just gives you an idea of how fast this can happen. Now, one of the reasons that countries are experiencing this dollar shortage is because the Fed continues their policy of rate hikes, thinking that that is going to get inflation under control. But of course, the real cause of the inflation, much of it has to do with the exorbitant government spending, the fiscal policy in Washington, where they continue to just borrow these massive sums of money. But instead of, trying to nip that in the bud, the Fed, Jerome Powell, he says, well, it's not up to me to tell Congress what to do with fiscal policy. Never mind that during the pandemic, he was certainly okay with telling Congress to spend more money. So when it comes to that side of fiscal policy, Powell doesn't have a problem with it. But when it comes to, reining in the spending, he doesn't think that it's the Fed's business to do that. And so he has not suggested that the government rein in their spending, and instead he's just hiking rates. And what that's doing is creating a dollar liquidity shortage. So countries like Argentina are being driven to use alternative currencies, and in this case, they are picking the yuan. Now, I do want to get into some of the other causes of de-dollarization because this is one of them. We're going to talk about three causes in this video. One is the Fed's hiking rates, that is causing it to be more difficult to get dollars around the world. Now, I am going to the chat here real quick. Thank you, everybody, for tuning in. Do appreciate that. If you're enjoying this live stream so far, if you think this information is worth spreading, please do smash that like button, and don't forget to subscribe to the channel, everybody. Now, a quick word from our sponsors, and also something I just wanted to point out to everybody out there is SD Bullion is today's video sponsor. Right now, they have got a sale on 90% junk silver. You can get it for $21 per $1 face value if you buy $10 face value at a time. So this is the first time that I have seen junk silver go on sale in some time, and that $21 per $1 face value seems to be just about the best price at the moment for junk silver. So if you're thinking of stacking some of this stuff, which, if you ask me, is one of the best forms of physical metal to be adding to your stack. I know the premiums still a little high, but you know, if you've been watching this channel for a while, you know that I think the premiums on 90% junk silver are going to be moving much higher in the future. So not a bad time to add some of that to the stack and do some de-dollarization yourself. Lighten up on your fiat and add some physical metal to the stack. Now, another leading cause of this de-dollarization trend around the world is the weaponization of the US dollar, the sanctions. And to give you an idea of how significant this trend really is, this is the 2022 year-end sanctions and export controls update provided by Gibson Dunn. Now, this was updated on February 7th, but really there's just one chart here I want to show you. And this shows you the new U.S. designations of sanctions targets by year. And you can see how those absolutely exploded in 2022. Just a sharp uptick both on the U.S. and the EU. Also, if you look at that, really just the G7 in the West sanctioning all these nations. But in particular, I want to draw your attention to the U.S. sanctions and how this is leading nations around the world to be a lot more nervous holding a lot of dollars. I mean, it makes sense. You see what's happened to Russia if you're on the international stage. You know, maybe you're the Saudis, maybe you're any one of these countries that really find themselves just kind of in the middle of things. China, certainly, you know, this is a huge motivation for them to de-dollarize and to be dumping more and more of those close to $1 trillion worth of U.S. treasuries that they control. And then the other thing from this report that I thought was very interesting here is a line that says, the past year was also remarkable for its many instances of genuine policy innovation. And this is referring to the policy of sanctions. As officials immobilized Russia's foreign reserves, introduced a novel price cap on seaborne Russian crude oil and petroleum products, imposed unprecedented controls on China's access to advanced semiconductors, and laid the groundwork for possible new regimes in the United States and Europe to review outbound foreign investments. And, you know, this trend of the dollar weaponization, it's been in effect for a while. I mean, you can see it kind of started back there in 2016. And previously, Donald Trump, I think, actually had the most sanctions on foreign countries for any president on record. But now certainly Biden has exceeded him by a long shot. And so you can see this is kind of a bipartisan move towards weaponizing the dollar. It's a popular thing in both parties, and it's very short-sighted, and ultimately it's going to lead to a significant reduction in the purchasing power of the dollar as it gets dumped, but that's where we find ourselves. And certainly this trend is continuing. This is from just a little over a month ago from the U.S. Department of the Treasury. With over 300 new sanctions, U.S. targets Russia's circumvention and evasion, military industrial supply chains, and future energy revenues. So yeah, we're continuing to increase the sanctions, to tighten the screws on Russia and now Belarus as well. That's their closest ally, I guess, over there in Eastern Europe. But again, you know, this might help Ukraine out, but it doesn't help out the dollar's prospects to remain the dollar's, or rather the world's reserve currency in the long term. And so to drive this de-dollarization trend, we have both the weaponization of the US dollar, the Fed hiking rates and drawing down dollar liquidity around the world. And then finally, the third thing is that out of control fiscal policy. Look at the national debt clock here. It seemed like it was just a couple weeks ago we were looking at 31.8 trillion, and since the Congress suspended the debt ceiling until January 2025, this number has just absolutely exploded. We are seeing the debt climb at an incredible pace. Now, when you look at this and you see that just over the past couple of weeks, it's gone up by almost $300 billion, dollars, the U.S. national debt. I mean, when you put that into context, that it took over 200 years for the U.S. to rack up the first $1 trillion in debt. And it really is incredible. And so, when we tell nations around the world, those holding U.S. treasuries, holding U.S. dollar denominated debt instruments, when we tell them, listen, we're going to default on this debt if we don't borrow more money, which is exactly the message that we were sending. I mean, it's a pretty clear signal that you want to start getting out of dollars. And so this is also driving the de-dollarization trend. Now, I just saw the 100th person pop into the live stream. That's awesome. So thankful to all of you who are tuning in today. If you haven't yet, please do smash that like button and say something in the chat. Tell us hello, ask a question. I always like these live streams for that purpose. Also, I do want to mention we've got the channel memberships now launched. If you would like to support the channel, it's $2.99 a month. You can click that join button down in the bottom. And I'm trying to come up with some member benefits. We had some great stuff left on a thread that I posted on the community section. If there's anything you would like to see as a member benefit here for the channel, just let me know. I mean, we can do all sorts of stuff. We can do Q&As. If there's anything creative you want to do, let me know. We can do members only live streams, members only videos. I'm open to suggestions, but YouTube is kind of encouraging creators to make this available as a way for viewers to support the channel, so that's live now. Now, speaking of de-dollarization, this is pretty interesting. This is a story regarding Jerome Powell, chairman of the Federal Reserve, who last week testified before Congress. This was him giving testimony before the House Financial Services Committee, and he discussed the threat of de-dollarization and the risk of the U.S. dollar losing its reserve currency. Now, I do think that that's pretty interesting, just that you even see Jerome Powell addressing the topic of de-dollarization. I think that that is very telling, and that is an indication that this is a very real threat, because typically the Federal Reserve, Janet Yellen at the Treasury, the president, they generally don't want to even discuss the possibility of any negative economic development. So when you see them covering the topic of de-dollarization, it's very telling. But here's a question that was asked by Congressman Richie Torres, a Democrat from New York. He asked, as you know, the U.S. has foreign adversaries, particularly the CCP, that seem intent on de-dollarization. How seriously should the threat of de-dollarization be taken in your view? And then Powell replied, he said the status of the U.S. dollar as the world's reserve currency is very important to us. Well, yeah, of course, because without that status, the Fed wouldn't be able to just endlessly print dollars and export inflation around the world. And then he went on to say, I think the reason that we have that status is largely due to our great democratic institutions, the rule of law, and the fact that we have, generally speaking, had strong levels of price stability. So, very generally speaking, I would say we've had price stability, but not so much over the past couple years. Maybe Powell should take a look at the chart of the CPI, because I would not call the type of inflation that we have had price stability. But I guess in a very general terms, sure, the dollar has had price stability, especially since the dollar became the world's reserve currency. So, the dollar has been the world's reserve currency for about 80 years. The idea of the Bretton Woods Agreement was floated shortly after the Second World War, and then I think it really fully went into effect in the early 50s. But essentially, the dollar has been the world's de facto reserve currency since the end of the Second World War. And I think it's very important to note that, for the vast majority of that time, since 1971, the dollar has been just a fiat currency backed up by nothing more than the, full faith and credit of the United States. Of course, when it became the world's reserve currency, it was backed by gold, $35 an ounce at a fixed rate. So kind of a bait and switch, really, if you think about it. But and if you go back to 71, I would hardly say that we've had strong levels of price stability since that price of gold has gone from $35 an ounce to almost 2,000. I've got some questions in the comments, folks asking me, is the price of silver going to go down some more in the short term? Who knows? I think we'll get some more, data at the next FOMC meeting in July. The short-term price action in the silver market, very difficult to call day to day. It's a very volatile market. I mean, it could go lower. I don't think it's going to go much lower than, let's say, $18 if it does drop. I would think that there would be a floor under it around that level. Thanks for the super chat there, Constitutional Stacker. That is awesome. Thank you so much for your support, sir. Always appreciate that. I've been enjoying your live streams, by the way. And then, okay, back to this article regarding Powell, because the lawmaker, the guy who had asked that previous question, this is a more interesting question. He asked Powell whether he thinks the US dollar's global reserve currency status is the cause of America's economic dominance or a consequence of it, because this is a critical distinction. And Powell said, to me, it's more of a consequence. And then he also went on to say there tends to be an equilibrium where one currency becomes the accepted global standard, and that has been the dollar for some time, and I expect that it will for some time continue to be. But this part about the dollar's reserve currency status being a consequence of American economic power, I think is pretty interesting. And Peter Schiff had a really good retort to this, I think. I'll show you the tweet here. Peter Schiff said, Powell is wrong. The dollar's reserve currency status was originally a consequence of America's economic dominance, but it has since become the main prop upon which that economic dominance now rests. Once the dollar's reserve status is lost, U.S. economic dominance will topple. And I tend to agree with Peter here as opposed to Jerome Powell. And, one reason for that is something that Ray Dalio points out in his book, Principles for Dealing with a Changing World Order. And I just want to show you this chart from that book, which tends to confirm what Peter is telling us there. And this is the chart of the rise and the peaking and then the decline of great global powers. And really the thing I want to draw your attention to here is the decline. And you can see that some of the things that are on this list have really already occurred. We've got number 13, large debts. Number 14, printing of money. Number 15, internal conflict. So kind of check, check, check. And then 16, the loss of reserve currency. And then finally, you have weak leadership and civil war and revolution following that. So kind of an ominous forecast there by Ray Dalio. But I just think the important thing to note here is that in the decline of a great power, typically one of the last things to go is that status of their currency as the world reserve power. It's kind of a vestigial thing. The world reserve currency status is a vestige of the U.S. economic strength that we had following the Second World War. Back then, we had a ton of manufacturing in this country. We had a very strong economy. We were the world's, we did have a lot of debt, it's true, following the Second World War, but we began to draw that debt down immediately as the war was completed. And, it's interesting. A lot of times right now, we have a debt to GDP, I think, of about 120%. And a lot of times people will say, well, it's been higher than that in the past. And one of the times was following the Second World War. But, when you think about it, we wrapped up the war and then we rapidly paid off the debt. What are we doing now? I mean, we're just borrowing more and more money. And, World War II, one of the largest military conflicts in human history, the largest. And, obviously that's going to cause you to rack up some debt. But right now, I mean, we haven't done that. We're just doing our day-to-day business, and we have accumulated this enormous level of debt. And so we're not in great shape economically. So, what can you do? Well, you can get hard assets. You can de-dollarize yourself. That is, of course, what we are seeing central banks and nations do around the world. A lot of countries adding to their gold reserves. China, I think they've been adding to their official gold reserves for something like 6 months in a row. Poland just bought a bunch of gold. The UAE's gold reserve levels, I think year over year, have increased something like 44%. So, folks in the know are getting into hard assets. Now, for me, sure, gold is great, but silver is just so much more undervalued in my mind than gold. So there's nothing wrong with gold, but for your average Joe trying to protect their purchasing power, maybe carry over some wealth to whatever the next uh, economic paradigm is after this decline here completes itself, I think silver is the way to go. Gold's fine, nothing wrong with it, but I do think that silver is going to be a better preserver of wealth, and also there's probably some more potential for actually gaining purchasing power with silver as opposed to gold. I'm going to go to the chat here. We've got Pure Blood Forever saying probably should send more money to Ukraine. Yeah, we are. I think we just approved another $2.1 billion of military aid for Ukraine. And that's not going to stop anytime soon. There was this thing about the Wagner forces creating this, civil war or what have you in Russia. I mean, who knows what's actually going on over there? What is it called? The fog of war is very thick these days, of course. But one thing I think that this shows us is there was a lot of support for the Wagner guy. I'm not going to Prigozhin. I don't know. I have a hard time with these Russian names, but this guy, is kind of a hardliner, and it seemed like he had a lot of support. So maybe the powers that be over in Russia are going to have to get more in line with this hardline view. I don't take it as a sign that this war is anywhere near over. It's just another one of these signs of how unstable the world is becoming. And so, we're going to keep spending a lot more money. Yeah, I get that was sarcasm, pure blood forever. But you hit the nail on the head, because we did just send more funds over to Ukraine. And, if war breaks out in the South China Sea, that is going to mean an explosion of the debt. That's going to become very costly, very quick. And hopefully that won't happen. But even if it doesn't, I mean, just look at the pace at which we are growing the national debt. And a lot of that, it has to do with the unfunded liabilities. If you think the U.S. debt is scary, just look at the unfunded liabilities, $191 trillion. How do you pay that? You can't. You cannot do it. It is not possible. So there's really two options when it comes to the unfunded liabilities in the U.S. We reduce the benefits payments going to all those folks who collect them, U.S. federal pensions, veterans benefits, Social Security, Medicare. That's not going to happen, though, folks. I know there's probably some of you getting triggered right now just at the mere mention. Excuse me. And, I know that you paid into the system. I've paid into the system too. But the problem is that there have just been too many promises made. And if all of them are met, if all of these payments go out, all the entitlement payments that exist that the federal government is on the hook for, the currency that they're paid in is not going to be able to buy anything. It's exactly what Alan Greenspan told us in congressional testimony. This guy's the former chairman of the Federal Reserve. He's kind of the guy who set us on this path that we're on, that we've been on for the past 2 decades. And he did that by keeping rates too low for too long, inflating the 2008 bubble, creating that crisis. That led to the QE. I mean, this guy knows what he's talking about. And he told us that we have a system that just moves cash around and that we can always guarantee the benefits payments, but what we can't guarantee is their purchasing power. And now, those were very prophetic words from Alan Greenspan, former chairman of the Federal Reserve, because now we find ourselves in a situation where we are staring down the barrel of global de-dollarization and massive currency debasement here in the U.S. And it's not a good thing for the economy, and hopefully we'll turn this trend around. Hopefully we'll balance the budget. Hopefully, we will get the spending under control. Hopefully, the Fed will be successful in fighting inflation. We will have a strong dollar and we will stop weaponizing the dollar, and the dollar will be the reigning world reserve currency for decades to come. I mean, I hope that that is what happens. I live in the US. I mean, I'm a patriotic American, but that doesn't mean I bury my head in the sand, okay? I want what's best for our economy and for our currency, but it seems like there's a lot of folks in charge with some very short-sighted views, and they are going to sacrifice the dollar on the altar of politics and geopolitics and inflation. And I just think that that's where we're headed, and that's why I'm still stacking hard physical assets. That's why I'm still getting into silver. Why I still think that silver is the most undervalued asset in the world at the moment, and why I think that having hard assets outside of this rigged financial system and outside of this fiat currency system is, at the very least, an insurance policy that you want to have in place. It doesn't mean you need to go put all your money into silver. I'm not telling anybody to buy silver. This isn't financial advice, but I am telling you what I'm doing, and that's getting into hard assets. So that's it for today's update on the global de-dollarization situation, rather. We've got Argentina dumping the dollar, and we have got massive debts and deficits. And, Jerome Powell, he might paint a rosy picture when it comes to de-dollarization, but obviously there are folks in Congress, there are people paying attention who understand the threats that we are facing right now. So hopefully cooler heads will prevail and we will prevent further dollar weaponization and de-dollarization, but I'm not so sure about that. So stay safe, everybody. Happy stacking. Appreciate everybody who tuned in. Consider joining the channel to show some support. If you like these videos, that would be massively appreciated. And I will catch you next time. Smart Silver Stacker out.